The RBNZ has its next OCR review happening Wednesday next week. Now, we expect a 25 basis point, 0.25% cut from 3.25 to 3%. That's generally the consensus around the traps. Bank economists, sort of commentators, etc., think that's where it's going to land, and I think that's probably most likely. There is the outside chance that they will hold. Inflation is still a concern, so inflation is currently sitting at the top end of that sort of 1 to 3% band that the RBNZ targets. And there was some pretty concerning food inflation data that came out last week, which implied that food prices had risen by an annualized 5% last year. Food tends to be quite volatile in terms of inflation, so that won't be the only thing the RBNZ is looking at, but it is something you're going to be paying quite a close attention to. The other side of that is the unemployment rate. That's sitting at around the 5.2% mark, which has been slowly creeping higher over the last year or two. So that's obviously helping support further rate cuts into the future. So the direction where they go from here will really come through in that commentary. The headline rate itself, I think, is relatively well understood. The commentary and what the RBNZ is looking at moving forward will sort of determine where they go next cut in 6 or so weeks' time. I think the consensus is that the terminal rate, the end rate, will probably be around the 2.5 to 2.75% mark, which will imply another 2 cuts after this one next week, but we'll see what happens. In terms of bank rates, so the floating rate will likely flow through, the OCR will likely flow through to the floating rate pretty quickly. You should see those floating and revolving rates come down, most of that 25% basis points fairly quickly. Fixed term rates probably not going to move much. We had most of the main banks passing through a sort of 10-ish basis point cut to fixed rates at the short end of the curve, at least a few days ago or last week. So those fixed rates really are driven more by international wholesale rates, so US markets, etc. That are having their own challenges with inflation and sort of growth. So those international rates are probably keeping those fixed rates a little bit higher than they otherwise would be at the moment. So don't expect big movements in fixed rates unless there's a downside surprise. So unless the RBNZ cuts further than expected, which I think is pretty unlikely. So we'll do a bit of a review post OCR on Wednesday afternoon sometime, just to sort of look at what the decision was and look at the commentary that came out of it to see if there's any clues as to what will happen in another 6 or so weeks' time. Until then, see you next time.